My full focus is the Bitcoin Treasury company strategy and to raise as much capital as possible, to accumulate as much Bitcoin as possible, as fast as possible, in the most accretive way as possible. But of course, if the existing activities can pivot towards Bitcoin over time, that would be very beneficial to leverage any type of synergy, and even if it's possible, even potentially help us raise more capital and accumulate more Bitcoin.
Traditional investors look when they are investing in a public listed company. So first of all, you introduce this new metric, Bitcoin per share, which is interesting, but then you need to assume that the investor you are talking to, they are orange pilled and they understand what Bitcoin represents. So I wanted to ask you, the investor that you managed to get, are they orange pilled? What is the stage? Hi and welcome to the Financial Fox. I'm your host, Stefania. I have been in finance and capital markets for over a decade and in Bitcoin since 2017. How far have we gone? I mean, it's incredible. Anyway, today I have on the show Alexandre Laizet, Deputy CEO at the Blockchain Group. So, as you know, we are doing this series about Bitcoin for corporation to give you some insights on how those companies are adopting Bitcoin, why they are doing it, the risks, the opportunities, and met with Alex in Orlando, and I said to him, right, you need to come on the show and share your story. So this is going to be really exciting because he's going to bring the European perspective. Before we get into the interview, I'm going to ask you a favor. If you are watching this interview on our YouTube channel, take a moment just to subscribe, and if it is on X, on LinkedIn, just follow us. Your support is so crucial to grow our platform so we can educate more people about Bitcoin. And also, please remember that the content on the show is for informational purposes only and not intended as financial advice. Any opinion expressed by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decision. With that being said, let's get straight to my interview with Alex. Financial Fox is sponsored by Hive Digital Technologies. More about them later in the show. Hi Alex, how are you?
Doing great, and you, Steffi?
I'm good. It's great to have you on the show. I mean, we met in Orlando for the strategy event, and I said, we need to get you on the show. And since then, I mean, what the hell has been happening? I mean, congratulations for, everything that you have managed to do. And I know it's not easy to orange peel traditional investors and, bootstrap a new strategy for a public listed company. So I want to know everything.
Awesome. Let's get into it.
Great. So maybe do you want to start, to kind of like walk us through when you started this Bitcoin treasury strategy for your company? And maybe before that, just give a short introduction of yourself and the Blockchain Group as well.
Yes. So today, the Blockchain Group is the first and largest Bitcoin treasury company in Europe. It's the ticker ALTBG. It had a performance of plus 3,000, 4,000%. It's the top performing stock in France and in Europe for companies above 50 million of market cap. It's the most interesting stock in France in the forums for investors. And it's just been a massive pleasure to contribute to the Bitcoin ecosystem in this way. We have generated record BTC yield, so the increase of Bitcoin per share, with more than plus 1,000% of BTC yield year to date. And we started the journey actually on 5 November 2024. We started with 15 Bitcoin, then 40 Bitcoin, then 620 Bitcoin, then 800 plus Bitcoin when we met back in Orlando. And now 1,400 plus Bitcoin towards 1,600 Bitcoin, after also operations that we have announced that are not yet completely realized. That's quite a journey, and we are part of the top 25 publicly listed companies with Bitcoin on the balance sheet. And we are one of the very few, you can count with one hand, companies that are laser eyes focused on increasing Bitcoin per share over time. And because you have thousands of companies that have Bitcoin on the balance sheet, and that's great, but we believe there is massive value into having a dedicated team, dedicated person to increasing and maximizing Bitcoin per share over time. And that's my full focus.
Tell us more about this metric. What is Bitcoin per share? Why is it important?
So Bitcoin per share is the best metric to assess as an investor if the company is providing you value over time on a Bitcoin standard. And so it measures at each operation, quarter, year, how fast the company is able to add Bitcoin net asset value to your share, adjusted for the dilution of creating new shares. And so for an investor, imagine that you have 100 million shares overall for the company, and you have 40 Bitcoin on the balance sheet. That's our situation in December. Well, in March, with the operation we did, we increased the number of Bitcoin on the balance sheet from 40 to 620, at the same time that we increased the number of shares from 100 million to 200 million. And so that's a 15x increase in Bitcoin on the balance sheet, while we increase the number of shares issued and to be issued by 2x. And so in this way, you can just do a simple calculation of the 15x divided by x. It's not the exact formula, but you can estimate that. And you get x increase in the Bitcoin per share, because you have this 15x increase in Bitcoin on the balance sheet and the 2x increase of shares. And so as an investor, that means that if you had 1 Bitcoin per share, theoretically, before the operation, then after the operation, you get 8 Bitcoin per share. And so that's a massive gain for the investor. That's to be nuanced with the premium that you pay as an investor when you enter a company as an investor, because the company is typically valued at a premium to the net asset value of the Bitcoin it has on the balance sheet. So imagine that you invest in the company when the company has an X premium, and then the company increases the Bitcoin per share by X. That means that you have completely recovered the premium. And that's what happened to our investors, between investors that invested early January, for example, and in March, we completely recovered the premium in 3 months. And so that means that for those shareholders, after 3 months, basically they only have more Bitcoin after this date, because every time we do a new operation and we generate more BTC yield and more increase of Bitcoin per share, after having covered the premium, then they get more Bitcoin per share. And that's the full value proposition of a Bitcoin treasury company, is to enable an investor to gain more Bitcoin exposure over time while not having to take a margin call or liquidation risk on an exchange. So it's a form of levered Bitcoin exposure without margin call liquidation risk. And that's a massive value proposition, especially because the company doesn't have to take leverage on its own to provide this value proposition. Theoretically, you can only do it with equity. And what we have added is also BTC denominated debt, convertible debt. We can get into more details, but that allows us to leverage debt equity linked instrument without adding credit risk to the company, which is quite important.
Yeah, it's quite interesting because you kind of mentioned a few things that kind of change the dynamics that, traditional investors look when they are investing in a public listed company. So first of all, you introduce this new metric, Bitcoin per share, which is interesting, but then you need to assume that the investor you are talking to, they are orange pilled and they understand the value of Bitcoin and what Bitcoin represents. So I wanted to ask you, the investor that you managed to get, are they orange pilled? What is the step for the audience that is also watching our channel? We still have got people that they need to learn. They are going through this learning process, is to explain a bit more about the premium. And then I'm going to ask about the different ways that you manage to fundraise, which is also very interesting. So maybe let's start with the investor meeting, how they go and what kind of conversation you are having.
Yeah. So 3 points on this in terms of the valuation key focus areas when you meet investors in Europe and across the world, but I will focus on Europe here. is that you have Tobam, a French asset manager that has been leading the way in terms of Bitcoin since 2017 in France. They manage 2 billion euros clients. And they have issued a mathematical paper that shows the 3 factors that investors can analyze to understand the value proposition of a Bitcoin treasury company. And those 3 factors are the Bitcoin exposure on the balance sheet, the BTC yield, the increase of the Bitcoin per share, and the BTC premium. And so we can synthesize the analysis of the meetings we have with European investors through those 3 lenses. So on the first element, the Bitcoin exposure, I would say that 70% of European asset managers have either already adopted the idea that Bitcoin is a great or the best store of value, but some of them, they cannot access it yet, or they have to follow internal procedures and so on. But most of them have accepted the idea, or they have recently capitulated because of the US government announcement of the US strategic reserve. And so now the carrier risk is to not adopt it.
Yeah, gotcha. So they are orange peel, or they secretly own Bitcoin anyway,
yes.
But they, for some reason, they cannot because the TradFi doesn't have the infrastructure for them to adopt Bitcoin in an easy way.
They have to follow internal procedures to get those investments approved. But we already have some institutional shareholders like Rothschild, like Generali. Those are big asset managers in Europe, and they are shareholders. We have more family offices and we have more fund managers as well. Many of them directly into the market. But Generali, for example, they subscribe to one of our equity issuances as a private placement. So it shows you that it is accelerating. It's amounts that are lower than what we are able to raise elsewhere. And across the world. I mean, 90% of the funds we've raised is through international investors. And so we are a European company, and we leverage the local scarcity that we benefit from by being the first and the largest, but we leverage global liquidity to grow the BTC stack that we have. So that's the first element. I would say it's very positive in terms of trend of adoption. The second element is the Bitcoin per share increase over time. I'd like to mention that it's not something we created, we adopted it. It's been created by Strategy, the first and largest Bitcoin treasury company in the world. So we have decided that the best strategy is to follow Strategy's strategy because it's the best strategy. And MetaPlanet has done the same first before us, and it worked extremely well. Then you, of course, have to adapt to the local financial instruments, but overall, this is the best model. And this is where we focus all of our energy. And I would say that on the Bitcoin per share element, investors are 30% familiar with it in Europe. And so you have some exercise of explaining how does it work. I would say that between 1 year ago and now, we've gone from even 30 to 50% maybe of asset managers that at least are familiar with the idea of increasing the number of Bitcoin per share. And so on this point, with one meeting, you can get the investors very excited about the company. And so I think those 2 boxes are already checked for at least 50% of traditional investors. I exclude the 30% of investors that just don't get Bitcoin. I don't spend time on this, except when I do, of course, public speeches and so on. I'm very happy to educate on Bitcoin generally, but in terms of raising capital, I focus on investors that already at least understand the idea of adopting Bitcoin as a treasury reserve asset.
How do you justify the premium? Because that would definitely be a question.
So that is the third element of discussion with traditional investors, and it is the premium. And so for the premium, I would say that if 30 to 50% of traditional investors can get and are comfortable with BTC exposure and Bitcoin per share, I would say that only 10 to 30% maximum of traditional investors understand the premium and how it can be analyzed and how it can make sense and how it can be compared with traditional premiums that exist as well on the market. And for this, Back gifted us with a major metric, which allows to completely shortcut the discussion into the premium. And that's the metric of the month to cover the premium. And it is how much time does a Bitcoin treasury company need to cover the premium that it has. And so, in effect, it is not as important the multiple of the premium. Is it 2x? Is it 5x? Is it 10x? Is it 20x? What is important is how much time does the company take to cover the premium, meaning to convert this premium into net asset value for the investor. And so imagine you have that we had, for example, 40 Bitcoin on the balance sheet in December with 40 million market cap. That's 4 million of Bitcoin and 40 million market cap. Where in March, we were able to add more than 40 million Bitcoin to the balance sheet. Basically, adjusted for dilution, it basically covered the premium, almost. And then we had about 50 million Bitcoin on the balance sheet and a free diluted market cap of 150 million in March, approximations, but to give you the example. And 2 months later, we raised 100 million euros more between when we met in Orlando and now. And we have added to the balance sheet about 100 million of Bitcoin. And so again, we were able to cover the premium from the perspective of the investor in March. And so you see that we can be quite fast into the premium coverage. And then it's a discussion with the traditional investor around the risk profile and the amount size and the exposure, because a professional investor cannot take a decision on an investment based on risk. Risk determines the size of the investment. What determines the decision of an investment is the thesis, the investment thesis. And so we believe that the investment thesis for a Bitcoin treasury company is the best investment thesis. There is no second best investment thesis, basically. And so then the risk determines for the traditional investor the allocation, not the decision of investment. And so there, out of those 10 to 30% of traditional investors remaining, then I would say that you would lose 50% of them based on the fact that they cannot justify the premium on their own, and they want to wait and they want to get a better premium, and probably they will get a much higher share price with a better MNAV, supposedly, but they would feel maybe more comfortable. And then you get maybe 5 to 10% of those investors as new investors for the company. And so if you take those figures and you assume that over time, the Bitcoin exposure would be from 70% to 90%, and that the BTC per share increase would be double the acceptance and the understanding, and the same for the premium, then you understand that we are just extremely early into the Bitcoin treasury company adoption by financial institutions, and that it's just beginning, and it's quite positive already. Between when we started and now, there is already, I would say, 2x or 3x the interest from institutional investors.
Hive Digital Technologies is one of the fastest growing publicly listed Bitcoin miners. You can find them on the Nasdaq Stock Exchange under the ticker Hive. By the end of the year, they are planning to quadruple their operational footprint, representing 3% of the global Bitcoin network, and they are on track to achieve that. They were also the first Bitcoin miner to implement an AI strategy. They have data center in Canada, Sweden, and Paraguay, where they are completely powered by green energy. Their priority is to build and scale a lean, shareholder-focused company that also transforms the community where they operate. If you are a brand or a company interested in adopting AI, you should check out their subsidiary, Buzz HPC, where they have different tools for cutting-edge AI solutions. Go and visit their website, HiveDigitalTechnologies.com, to learn more. Now back to the show. Interesting. So So tell us, how have you been raising capital? Which mechanism have you used to protect shareholder value, which is big things when you're running a public listed company?
So there are various tools to raise capital. And you can separate those into equity and debt-related instruments. And on the equity side, you can differentiate between equity in private placement, that is issuance of new shares for capital increase for determined investors, typically qualified investors, that would put in a large amount. So that we have used quite a lot, about 20-30 million euros. And then you can use the issuance of shares to the public in a limited fashion through stock acquisition rights program without a prospectus. We have done this, but it's limited to about 7 to 8 million without a prospectus for all shareholders to participate into the Bitcoin Treasury company strategy. And then you have...
That's maxed out.
So yeah, but then you have also the capacity to do prospectus. It needs to be approved by the regulator. And then when that is approved, you basically have no limit over than the general limit of your General Assembly to raise capital. And that we have asked and been approved to have the capital raising capacity to more than 10 billion euros. And so we have a lot of flexibility into what we can do. And that's any type of equity issuance or equity linked instruments like convertible notes. And so then you have convertible notes that you can issue, and those include fiat convertible notes and BTC denominated convertible notes that we invented.
That's what I'm really interested. I think the rest is very similar to capital markets, in the UK and around the world. But that's kind of like new mechanism that Bitcoin treasury company are coming up with. So tell us about it.
Yeah. So basically, the fiat convertible notes worked a lot for strategy. If you calculate the performance of strategy since the issuance of those convertible notes, either 3 years ago or 1 year ago, the performance is massive. I mean, we are talking 3-digit percent performance, 200%, 500%, and more. So that's a massive performance. Yet, as we were at 40 Bitcoin on the balance sheet, you are limited in the number of fiat convertible notes you can do. Fiat convertible bonds, so subscribed in euros or dollars, you are limited to 20 or 30% of the value on your balance sheet of Bitcoin. And so we had 40 Bitcoin, so we would have raised a very minimal amount, and it was basically not adapted. So we created an SPV out of Luxembourg that would receive directly subscriptions in Bitcoin, and the debt is also denominated in Bitcoin. So we skipped fiat completely. And that way we have no credit risk, because on one side we have the BTC denominated debt, and on the other side we have Bitcoin. And I mean, 99% probability is that it converts into the stock and we don't pay back the debt because we issue shares to pay the investor. And why I say that? I say because the condition for conversion into the shares is that the stocks perform by 60% about that. So 3 months after the operation, the stock has done. So there is risk always, but basically Bitcoin itself does about 30 to 90% every year on an annualized basis over the last 5 to 10 years. Even on a low basis, it could do 30%. Even if it does 10, 15%, it would also on itself, even if we stop raising capital, potentially it would work. But of course, we are not stopping. So then even if Bitcoin stayed flat and we did more capital raising, which we will do, then you have even just a 60% BTC yield at constant premiums that's just allowing the stock to theoretically convert as well. So with BTC continuing into its current trend, or even much lower with just the fiat devaluation of the currencies, and with us continuing to do the BTC yield generation, I mean, except if Bitcoin completely fails and stays at level not seen before for 5 continuous years, because the term is 5 years, and the last 2 years the company has the right to convert. And so the company is extremely protected, and the investor too, because basically if the company fails, of course we work every day for it not to happen, but it's always a risk, So if the company fails, the investor gets back the Bitcoin. But basically, if the company doesn't fail and continue its Bitcoin treasury company model, then 99% chance is that it's converted into shares and it's converted into permanent capital. So basically, it is as close as you can get to permanent capital because of this probability of non-conversion, which is extremely low if you believe in Bitcoin.
Yeah, and also, that's how you kind of navigate the volatility that can happen, I don't know, next few months or whatever it is, next year, you might have a drop in Bitcoin, which always happen. And that's the opportunity where people buy. But if you look at at a 5-year horizon, it never happened. That has gone down, 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 down till, and never coming back. So, even if there is a small drop, that it doesn't impact because of the 5 years. So that's very interesting.
I would like to mention the last financial instrument that we've announced early last week. And that's the ATM-like program that we have launched in partnership with the leading asset manager Tobam to have the same equivalent of the ATM structure in the US, but and even in a more accretive way potentially, because this is basically a long-only ATM. It means the ability in the US for companies to issue shares and sell them into the market to raise capital at the market prices. And so in France and in Japan, it's not directly feasible. So we inspired ourselves from the great success of the MetaPlanet program with the stock acquisition warrants at the price of the day before. And we partnered with Tobam so that they can, on their own, we are not even paying them for this, they can have access to new equity issuances at the price of the day before by basically having the possibility, and then they organize as they wish, to reconstitute their stock. And they can sell shares and acquire new ones to basically convert the premium that we have into net asset value on a more regular basis. And so that is very complementary with our BTC denominated debt on one side, which another advantage is it allows to scale infinitely the capital raised on a Bitcoin basis, because we have no credit risk on the operation. So if one major investor wants to put 1,000 Bitcoin or 10,000 Bitcoin at some point, we could have him come, with this instrument. And so that's very complementary with the ATM structure that can be activated on a more regular basis and stack more Bitcoin over time.
I want to ask you, what does the blockchain group does? Because I think that's quite important. You have a public listed company that's got Bitcoin treasury strategy, which is a great strategy. But then what the company does is just a Bitcoin treasury strategy. That's trend. Everybody talks about it right now. But if that wasn't, what do you talk about?
Well, before we started, the company had a 15 million market cap. Now we are at about 700 million. So you can see that the size of the Bitcoin treasury company strategy activity is basically, from a capitalization perspective, the main activity. But it's a balance sheet activity. And then on the other side, you have the operations that were existing before. So the blockchain group had many lives. It started more than 10 years ago. I just joined in November 2024 after it was completely restructured. So it started more than 10 years ago as a media agency. And then it started to have a growth strategy by acquiring new companies to generate growth as a public entity. And basically, some of them were not profitable. And so that led to a major restructuring event in December 2023, where all of the management, all of the board, all of the major investors got replaced. And in 6 months, the new board, the new management, new investors, they managed to get the company back to profitability by selling and liquidating all of the subsidiaries that were not profitable. And that included one subsidiary that gave the name of the blockchain group, which was at the time, back in 2021, a company specialized in wallets for corporates to hold digital assets and NFTs and these kind of things. And obviously that failed. And it got liquidated. And that's why I joined. I joined because the Web3 company was liquidated. And because
I love that. Let's scale web.
Yeah. Actually, when I was at Accenture before, I used to work with banks that were adopting digital assets. And one bank thought about partnering with this Web3 company. And I advised against. So I didn't help. And so when I say that I joined because it got liquidated, I joined because it got liquidated. And I joined because as well, in 6 months, they were able, the new board and new management, they were able to get back the group overall to profitability by keeping only 2 subsidiaries that are specialized in web development and business intelligence. And so it's technology consulting that includes some blockchain development as well for clients, but it's mostly web tailored development, leveraging data and AI analytics solutions. And that's for medium type enterprises in France, mainly both private and public sector. And that generates 13 million revenues with 1.3 million net result last year.
Wow, very interesting. And I guess there is the scope also to look in the future, maybe do acquisition of Bitcoin, company they are developing Bitcoin product, because we do need, the infrastructure around Bitcoin and TradFi still,
so kind of. On our side, we are fully focused on the Bitcoin treasury company strategy. So we view that everything else is a distraction. However, for the existing activities we have, we do intend and look at opportunities to pivot into the Bitcoin ecosystem. And so I had great clients back at Accenture. And so, of course, if there is any synergy in terms of tokenization on top of Bitcoin and so on, it would be of a great pleasure. But that is not my full focus. My full focus is the Bitcoin treasury company strategy and to raise as much capital as possible, to accumulate as much Bitcoin as possible, as fast as possible, in the most accretive way as possible. But of course, if the existing activities can pivot towards Bitcoin over time, that would be very beneficial to leverage any type of synergy, and even if it's possible, even potentially help us raise more capital and accumulate more Bitcoin.
Yeah, laser focus on Bitcoin treasury. That's very interesting. So I just want to ask you something. How do you see outside Bitcoin? So how do you feel about the rest of the crypto ecosystem, or what this Web3 kind of like buzzword, what that means to you?
So I give zero attention to anything other than Bitcoin in the digital assets industry. I believe that the digital assets industry is Bitcoin. Everything else, I see it as fiat, basically. And so I give absolutely zero attention to it. However, I think that there is a misconception that affects a lot of investors, and that I sometimes help them to understand, is the differentiation between the technology and the asset. And so Bitcoin is the best asset because it has the best technology for store of value. And on top of this, you have layers on top of it like Lightning and Liquid and so on that allow for more applications. And I believe that all technological innovation will over time flow to and around Bitcoin. So what interests me and what sometimes I look at is what financial institutions are doing in terms of adopting new technologies. And sometimes you see new announcements of X institution adopted this technology for this use case and so on. But you see they adopted, for example, EVM type code lines to do tokenization. They didn't adopt Ethereum. They adopted code lines, they copied them and they integrated them into their processes, or they leveraged the network as rails, but they don't adopt the asset as a store of value. And so what is extremely logical is that as Bitcoin is the standard store of value, and it is already, in my view, the global standard for storing value, then over time, any type of technology innovation will flow to Bitcoin. It's normal that institutions, they will use technologies that they deem efficient for certain use cases. Like, Tether, they use Tron and they use certain technologies to move tokens and so on. And over time, Tether intends to issue their stablecoin on Bitcoin as well. So it takes time, but it will happen because Bitcoin is the underlying cornerstone store of value. Then all of the technology type innovation you can see elsewhere are interesting, but they don't mean that they translate into value for the tokens that are supposedly related to those technologies. And so that's what many people in the crypto industry don't understand, is that even if they are working on some innovation, the value produced in the economy will flow to Bitcoin. And if some technology is interesting, then this technology will over time flow towards Bitcoin related applications.
Yeah, very interesting. Alex, listen, thank you so much for joining and talk very soon. I want to know, actually, I'm looking forward to see what's happening to the blockchain group and having this discussion again in 3 months maybe.
Awesome. Thank you so much, Steffi, and looking forward to the next one.